The global crude oil market is undergoing significant changes, driven by the unintended consequences of trade policies introduced by former U.S. President Donald Trump. These policies have reshaped long-established trade relationships and forced countries to adapt to new realities. Today, we'll explore how Canada and China have responded to these shifts and what it means for the global oil trade. One of the most striking changes is Canada's pivot in crude oil exports. For the first time ever, Canada exported more seaborne crude to China than to the United States in April 2023. This shift reflects a growing desire to diversify markets amid uncertainty created by Trump's trade war. In April, Canada shipped 299,000 barrels per day of crude to China, compared to 286,000 barrels per day to the United States. While pipeline exports to the U.S. remain dominant at around 4 million barrels per day, the narrowing price gap between Canadian and U.S. crude highlights a surprising dependency reversal. Trump's sanctions on Venezuelan oil, which shares characteristics with Canadian crude, inadvertently increased demand for Canadian oil in the U.S. As a result, U.S. refiners are paying more, and the discount on Western Canadian Select crude has dropped to its lowest level in over 4 years. Meanwhile, China has shifted its focus to Canadian crude as part of a broader strategy to reduce reliance on OPEC+ nations and diversify suppliers. This aligns with China's ongoing trade tensions with the U.S., where tariffs on American oil have rendered it uncompetitive in the Chinese market. Canada's seaborne exports have also benefited from infrastructure improvements, such as the Trans Mountain Pipeline expansion, which increased capacity to 890,000 barrels per day. Initially, this oil was expected to flow to U.S. refiners, but geopolitical tensions have redirected these shipments to China. China's adaptability in oil trade highlights its willingness to partner with countries like Canada. While U.S. crude exports to China have plummeted from 417,000 barrels per day in mid-2022 to zero in May and June 2023. In summary, Trump's trade policies have had far-reaching effects on global oil markets, reshaping trade flows and dependencies. Canada has found new opportunities in China, while the U.S. faces challenges in maintaining its market share. As the world adapts to these shifting dynamics, the importance of strategic partnerships and diversification in energy trade cannot be overstated. Thanks for watching, and don't forget to like, subscribe, and share your thoughts in the comments below.